Hey, so I'm just going to give you the short version. You can stick around if you want the long version, and you can learn something about TA, but basically I'm feeling pretty bearish in this market. Although with these types of markets where we have an initial big slump down and then a rise up to a Fibonacci target, you can never really time when the next downward movement is very well. So I'm probably going to be selling calls. I don't think buying a put here is very unreasonable. I sold a call when the current SPY price was 291, and I sold for a strike price of 300. And if the market gets above, or SPY gets above 305, I'll probably stop out of that position. But the reason for that is, like I said, it's hard to time. So it kind of makes more sense here to take a position where you have theta on your side, like a call credit spread or selling a naked call and just stopping out if things get too rocky. Buying a put is a little bit riskier because theta is going to be working against you. As always, we're going to start with the news. I haven't seen anything particularly compelling that'll move the market other than the House just passed a proposed stimulus bill that everyone's expecting to get vetoed anyway. But at this point, what I'm kind of expecting at this price level with SPY is we're going to see the opposite effect we saw negative news have in the recent run-up, because what I think we're dealing with at this point is everybody has a general sense of what could be happening, what the government could be doing, and the good events that could possibly happen. What we're seeing more is just waves of greed and fear take over, with large-scale news events really only converging those patterns a little bit and not really changing the market directionally. So I think as panic starts to set in I'd probably say within the next 4 weeks, we're going to see it. We might see the start of it in the next 2 weeks. We're going to see that no matter how much good news there is, we're going to see a little bit of downward movement. I'm not entirely sure how much. We'll look at the charts and figure out good support and resistance levels so we can build a better expectation of when we might see reversals. But I think we're going to see capitulation no matter what the news is. Yeah, there's a couple of cities reopening. It seems like there's a lot of misplaced optimism in the market right now. We still don't have a vaccine for this, despite what the president may say. There really have not been any extraordinarily compelling treatments for coronavirus either. So, I mean, people will obviously get excited with businesses reopening, but a lot of these retail businesses, airlines, things like that are going to experience a massive demand shock, as well as other businesses too. I think the only businesses we'll see doing really well, even after reopening, are the ones that have already been performing well during coronavirus, like Costco, Amazon, things like that, Fiverr. I think those are going to be the big winners. All these other companies that have seen these meteoric rises, like airlines, that's just all greed, overt optimism. And then once those people start to get burned and see those turn around, the effects of fear are going to take over again. Okay, so taking a look at the charts, I already went ahead and did the major supports and resistances. And we have this 10-year trend line that the market rarely touches. It broke through here, which was a very bearish signal, but we'll see how that pans out. We're going to start off on the longer intervals and work our way down to the shorter ones, as we always do. On the weekly, it looks like the MACD is just about to flip over to neutral. That could be interpreted as a bullish sign, but I'm not so convinced yet. The KDJ is decidedly overbought on the weekly even. You can see the divergence is above 100 right now. And it looks like it's starting to level off a little bit, which, like I said, my theory is once people see that level off, we're going to see a point where any possible good news is priced in, and bad news is going to have more of an effect on the market than good news would. Essentially the opposite effect of when we went through this initial run-up where people were posting memes like aliens take over the earth, stock market reaches all-time highs. Net volume, you can see actually this last week was negative 550 million. It looks like the sellers are starting to take over a little bit. So on the daily, it looks like the MACD just reversed and is now bearish. It's not very strongly bearish, but it's bearish. The net volume was actually on the buy side, but we can see in the last couple days we had kind of these weak 2 green bars. They didn't really have the strength of these green bars during the initial run up. I don't really interpret them as a bullish signal. And you can see how volume has really like slumped off. And it's almost the people who bought here, it was almost like pure FOMO. That's like, and when you really think of the standard distribution of when traders are willing to enter a position, you know, these are like the worst traders, like 3 standard deviations out of the normal. The people who just bought when it did not make sense to buy at all. I think these are obviously going to be the first people to panic. The KDJ is pretty neutral. It's convergent, though. That's an important concept. So you see how we have this big wave here, and then we have a smaller wave, and we have an even smaller wave. So what that means a lot of the times when you see this KDJ convergence like this, where it's just smaller and smaller waves, is the market's kind of reaching what a lot of analysts call a decision point. There's kind of an equilibrium between buyers and sellers, and it's almost like somebody just poured gasoline all over the market and everybody's just waiting for a match. You know, the people who bought in at this point know they didn't really get a good price. If they start to see a rout, they will sell off immediately. The people who bought in down here are just waiting for some indication for if the market has really reached its temporary apex, and they'll join in the sell-off too. Or there could be great news. They could come out with a vaccine and we'll just continue the run up. But I think more than likely we're going to see a rout within the next few weeks. The net volume still being positive, though, is kind of interesting. All right, so let's look at the 1 hour. See if we can find some good entry points. Like I said, I already found my entry. So maybe this could just serve as a general sense of what to expect for the next few days. And if you can find a good entry for a short or put or sell call, you know, short call position. So it looks like the KDJ is decisively overbought on the 1 hour, which could indicate potential sell-off coming in. You can see that the MACD also is convergent, and it's starting to converge downward. There's a little bit steam left in this 1 hour interval uptrend. The overall market pressure is going to be bearish. So to summarize on longer intervals, we're looking more neutral, maybe slightly bearish. The KDJ is significantly overbought. The MACD just crossed over into a very weak bullish signal that I would not trust at all. Just based on the combination of the information you're getting from the KDJ, the MACD, and the fact that we're currently at a very important resistance level. This is where people bought in the small bull trap on the initial run down. So there's probably going to be a tendency for investors to panic very easily at this price level. Now, if we use the 10-year support trend line as a target, we're looking at maybe a capitulation back down to around 266. If we break through that, we could see the 10-year trend line gives us a target of around 265, my bad. And the lower support below that gives us a target around 254. So if you can get in a short position right now, the risk to reward makes a lot of sense. If you can get in around 290, right, and you put your stop at 300, then you're essentially, I'd have to calculate the exact percentages, but it comes out to something like you'd only be risking maybe 1% for a potential 5% swing. So that, like I always say in the Discord, you want at least 1 to 2.5. 1 to 5 definitely makes a lot of sense. On the slightly shorter intervals, the daily, we're looking to be starting a more bearish pattern. The KDJ is totally convergent. The MACD is neutral bearish. And then on the 1 hour, we're looking pretty seriously bearish. So all the intervals kind of combine to generally give me a sense of an upcoming bearish trend. Now, I don't like to do as other YouTubers do and predict the end of the market or a recession or something like that. I'm more of a momentum trader, so I'm really just trying to decide which way I think the market will go in the next couple weeks. I have no idea what's going to happen, in July. I don't really know or care whether this is indicative of a recession. It's not important to me as a trader. All I know is right now I prefer short or put positions. And that's it. Thanks for watching. If you want to help out the channel, leave a like, comment, subscribe, especially if you noticed anything I didn't or you have something different in your TA. Make sure to comment, and I'll probably talk about it in my next video. Of course, all credit given to you. If you're interested in using any of the same charts I use Webull. There will be a referral link down in the description. So I'll see